Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, yesterday was a bloodbath in equity markets. We're seeing a recovery today. Resistance we have on the Morning Express, and that's held so far. We'll look at those levels. But to the downside, we will tell you that close on yesterday's session, 25.55, the lowest close since October 2017. That's the gap area. That's where there's going to be support, and you want to buy the first test into that. Look for a bounce. Now, to the upside yesterday, when that market rallied, 26.05 was the high. That was the gap close on Friday. These gaps are important. Look for those in the charts, and they are tradable. But again, if it rallies off that gap and starts to fail, you got to get out of the way, because you want to look back at that gap from the summit at the summit, that G20 summit meeting between the U.S. President Trump and the Chinese President Xi. That gap higher, when that broke down through that gap where it closed on Friday and opened on Sunday, and it just broke through that so quickly, the selling was waterfall-like. So if that happens in a gap, you want to get out of the way. Just very quickly touching on those. Now looking at crude oil, that is a bit of casualty to the global risk-off sentiment. More than anything, with the equity market moving, crude's been a dog, and it's been down for 2 months. And as we talked about in the Morning Express today, that has really had a hand in this selling. The fact that when the equity market went yesterday, crude went with it. 47.74 is a big level on the long-term basis. Technicals have almost been out of the window on support levels because no one is stepping in and buying. But that's a key level to watch today. We want to see if that can hold heading into the inventory report tomorrow. And then lastly, touching on gold, it's been trading great. Wouldn't be surprised to see it just kind of consolidate, come in a little bit today. Building permits and housing starts did both beat. So it would look for a consolidation. Equity markets as well, they're trading a little bit higher right now, holding gold back from further gains. But if we go into the Fed meeting tomorrow, and that Fed is less hawkish or even dovish, watch those percentages, as we talked about in the Morning Express, where that March hike is going to be. Because they're all likely going to hike tomorrow, but getting that March hike, now it's down percentage probability of below 20. That was nearly 40% 2 months ago. So watch that, and if that decreases, you were looking at the dollar decreasing off of more dovish talk. Gold should be breaking out, moving out above 1250. Watch for that in gold, and we maintain the fact that longs are underpositioned and shorts are overpositioned. We'll leave you with that. Give us a call. If you have any questions, we're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.